Hey warriors, hope you're all doing well. This is your friend RAHUL Agarwal and I welcome you all back to the next episode of your assignment series, your assignment number 5. We're discussing about clubbing and set-off. We've already gone through assignment number 4 people, your assignment number 4 on capital gains and IFRS, 3 was about HP, 2 was about salaries, 1 is about residential status. Your PGBP is getting merged with comprehensive questions, so yes, we are doing an amazing job till now. If you have stuck with me till here, you're already doing so well for your examination preparation. I hope you are going to go through very well. Yes. Now, this session, what we're going to discuss today is going to be a little technical. Technical for two reasons. One is that most of the students try to avoid question number 6. For some reason, students feel question number 6 is to be skipped off. They probably try other questions because they have question number 6b, which is about theory questions, and 6a generally gets a little complicated. People think that if they can skip off clubbing and set off together, then why not? Yes. Unfortunately, if you come and ask me my personal opinion, I always tell people that question number 6a is a must question to try. This is one of the most easiest questions because at the same time, you don't have to focus too much about every chapter. There are very few nitty-gritties that you have to discuss. And a chapter like clubbing, which is about 2 sides, chapter like set-off, which is about half a side, this is an easy scoring 6-mark topic. Yes, I'm not going to deny you the fact that there is not just clubbing and set-off that gets tested here. They do test you on some other adjustments as well, some part of other topics as well. But hey, let's be soft. You are already going to attempt question number 1. When for question number 1, you've already prepared comprehensively, I don't see a reason why clubbing and set-off should be any different for that matter. So yes, I do recommend question number 6 to always be attempted off. So what we're going to do, people, is I have collated 11 questions from the last 11 papers for you. We're going to be doing each question in detail properly together. Before I do that, if you can do it from your side, amazing. Please try it once from your side because that will make it easier for you to cross compare with what I'm doing. But if you're not able to attempt it from your side, no worries. Stick with me on this video. In this video, what we're going to do is we're not just going to discuss the answer. I'm also going to tell you how to approach these kind of questions. What is that smaller places that you have to keep in mind when you approach these kind of questions so that you never make a mistake. At the same time, if there are some adjustments which are extremely important, we're also going to mark them as LDR. So yes, today's session is going to be little lengthy, but very informative for all of you. So stick with me and we will get through this topic together. Question number 6 is going to be in your hands for you to go for your examination. 6p is anyway going to be theory. I've also collated the theory topics as an assignment for you people so that you have all the theory in one single place. Doing that, 6th question becomes already confirmed for you. 14 marks guaranteed. Yes, with that understanding and with that kind of positiveness is what we're going to start this topic. So let's start together and let's quickly get into this 11 questions for us to discuss together. Shall we? Let's go forward. Question number 5, assignment number 5, question number 1, let's discuss about it. Question number 1 says, I am a person called Mr. Akshay and Akshay is a resident individual providing the following details for you. Yes, first things to be kept in mind is when you see a resident, it is always important that you highlight it off. Why, Rahul? Why is resident important? Sometimes if you get a question on tax liability, you need to keep some things in mind. Resident person gets rebate eligibility. Resident person gets Kaju Katli benefit for capital gains. Resident person also has to ensure that he gets the proper deductions under ATT, TAT, TB, ATD and all that stuff. So yes, resident has some important criteria. Let's mark resident important. Next, let's look at the following data. Now, if I look at the data, people, there is so much information given to you. And if I always notice, I'm seeing losses coming up. Yes, now whenever you see losses, there is one rule and one thumb rule that I always follow in classes and I want you to follow it along with me. Rule number 1, whenever you see the word losses in your chapters, always start from losses first. What? Always start from losses first. The incomes may not be very critical. The losses is more critical because the restrictions are on the loss side, not on the income side. If you know your losses properly, you will do it better. That is what one suggestion I'm always going to give to all students. So please do that properly. Let me show you how. We're going to go through from the top, people. Question is basically come and told you want the total income. Okay, total income is requested. Amount of loss has opted out of DTR, which means the person is going for ATR scheme. Yes, alternate tax regime is what I'm going to go forward to. So let's look at ATR and let's do the answer accordingly. From the top, every time I do this question, I am going to make small adjustments everywhere. Look at it carefully. First, it says income from salary and the highlighted word says it's computed. Computed means already standard deduction is given. This is my taxable income. Hold back. It's an income. I don't care. Hold back. Next. Rent received from house property situated in Delhi, 5 lakh rupees. Notice it says rent received. When you see the word rent received and not rent computed, it means you automatically need to trigger a 30% standard deduction. Yes or no? Yes. Now, Rahul, you're making these kind of notes. Can I make the same adjustments in your exams? Yes. You are permitted to write very, very small changes in your question paper. ICA examiner will not question you on those. As long as you don't write too much information in your question paper, it is still perfectly valid for you to make notes. So if you make notes like these in your question paper, it will become extremely easy for you to prepare when you write your examinations carefully. Yes. Read. Repayment of loan taken for purchase of above property. People, when you say repayment of loan, it is automatically 80C. Chapter 6 deduction. When you repay housing loan, you're going to get 80C deduction on it. Loan was taken from a friend. Repayment includes a payment of interest of 7 lakh rupees. Yes, we've discussed this in classes. When you have loan goes under 80C. But when you have interest goes under HP chapter itself. So let's put this under HP topic and we'll take it forward from there. Next, rent received from house property situated in Jaipur. Again, see, it says rent received, which means again I'm going to get a 30% standard deduction. Next, interest on loan taken for repair of the property situated in Mumbai and Delhi. People, here is where students end up getting tricked. Notice it says Delhi and then they say something called Mumbai. I don't know where Mumbai is coming from because I saw only Jaipur here. Yes, this is Mumbai. Mumbai is a different house altogether, which means probably Mumbai can be an SOP house. I don't know. We'll have to check. But Delhi ke liye, do you see an issue? No. I don't see an issue. Understand? Rahul, I saw the word repairs. No. Repair matlab I should only claim 30,000 deduction. No. We've discussed this in HP also, people, that when you go to an LOP property, repairs have no relevance. As long as it's an house property loan, it will be fully allowed as deduction on an LOP property. SOPs have compulsions, no LOP compulsions. Keep that in mind. The property in Mumbai is self-occupied. See, now they've confirmed that the property is self-occupied. Loan was taken on 1st April 2018, was utilized 50-50 for the ratio of house in Mumbai and Delhi. Which means what we're going to do is, this 1,50,000 is now going to get split off. How is it going to get split off? 75,000 will go to Delhi and that Delhi can claim full deduction, because it's an LOP property. But when it comes to the balance 75,000, notice carefully that the house loan was taken for the purpose of Mumbai and Mumbai property is self-occupied, making this a restriction of 30,000. Yes or no? Yes, keep that in mind. Next, long-term capital gains on sale of equity shares on which STT has been paid. This is section 112A. Now Rahul, why are you writing section numbers? Anyway, total income is asked. Yes, I agree. I am just writing it for the purpose of my convenience. Now people don't start taking Rahul 7,95,000 minus 1,25,000. No, those are all tax computation issues, not an income issue. 7,95,000 remains as it is. Next, interest on fixed deposit. See, it is interest on fixed deposit. When you have interest, this goes under IFOS. But at the same time, if you notice that if I am an individual who's a resident senior, in that case, I can claim this as 80 TTB deduction. Let's check what is this age given. Have I been given the age anywhere? Nowhere age is mentioned. I'm going to assume this is not going to be a senior citizen. With him not being a senior citizen, I can directly say no deduction will be granted under chapter 6A. Yes, I'm writing no deduction under chapter 6A for your understanding. Clear? Good. Loss from textile business. See, here is where the point starts. People, this is the first thing I'm going to mark. I'm going to mark it as P. Why are you marking it as P? This is a loss from PGBP. A PGBP loss can be set off against any head other than salaries. But to set off against any head, first you need to set off against PGBP. Yes, always intra-head, then inter-head. Let's check till now. People, till now, whatever we have received, salary, rent, and capital gains. Do you see PGBP here? No, which means I will have to read forward and then see. Next one says speculative business profit. This is where the trick comes. People, this is what you're going to mark as LDR. Now here is where students will end up getting confused. Look at this carefully. I have loss from textile business and I have income from speculative. Can I set off? Answer is yes. Now, for those who are thinking right now, Rahul, speculative can only be speculative. No, that is the mistake that you're making. Understand, speculative loss cannot be set off against other profits. Speculative loss has a restriction on speculative profit. Normal loss can be set off against any head other than salaries. And this is why I asked you to keep in mind, always start from loss perspective. If you start from loss of textile business, loss from textile business is a normal PGBP loss. Normal PGBP loss can be set off against any head except salaries. Any head also means speculative head. So you can set off, very, very important. Yes, this is what you have to keep in mind and this is where students get up confused. I'm again repeating myself, look at this carefully. Speculative loss cannot be set off against other heads. Normal loss can be set off against any head except salaries. Yes, so here is a case where it is not speculative loss, it is speculative profit. Clear enough to go, my friends? Let's go forward. Next one says lottery income, directly taxable. Loss incurred by the firm in which he is a partner. Now this is an adjustment which students end up getting confused. People, loss from a partnership firm is exempt. Loss from a partnership firm is exempt. We have discussed about it. Any share of profit from a partnership firm is exempt. Because share of profit is exempt, loss is also exempt. Yes, which means this has not to be taken. I can ignore that adjustment directly. Next, it says salary received as a partner from a partnership firm, the same was allowed to the firm. The next thing to be kept is LDR. One horrible mistake students end up making in examinations. Students starts using the word called salaries. They saw the word salary, they were like, Rahul, salary, no, let's go and put it into salaries. In salaries, you'll get a standard deduction, therefore this is gone. No. People, notice this is salary coming from a partnership firm. A partnership firm is taxable under PGBP. If you remember, we have discussed this so many times in classes also. Any salary received by a partner from a partnership firm goes under PGBP. Correct, not correct? Keep that in mind. Next, life insurance premium paid for his own son who is 30 years of age and is working in USA, 15,000, allowed as ATC. Allowed as ATC. Now, just because the son is working somewhere else, dependency is not important. No. People, when it comes to life insurance can be taken for self, spouse and children. Children may no restrictions whatsoever. You can completely take it off. So, therefore, ATC deduction will be granted to me. Next, yes, the following brought forward loss is given to me. I have a brought forward short-term capital loss on sale of gold. People, can I set this off? Yes. What am I going to set this off against? I'm going to set this off against my capital gains. What capital gains? I saw on long-term capital gains. I can set it off there. Next, brought forward loss on sale of equity shares under section 111A. Again, this is also going to be short-term capital loss, can be set off against any capital gain. So again, CG ke liye set off permitted. Compute the total income of Akshay for 26-27, amount of loss that can be carried forward. Akshay has opted out of default tax regime. This is what the question is. Yes, now that you have done the analysis with me, you should be able to answer the question very, very easily. Why am I telling you this? People, the format is extremely important to be kept in mind. So let's keep the format in mind. Now, what is going to happen is when you approach a question like this, always first knock off the losses. When you knock off the losses, you will make a better understanding on things. So first what I'm going to do, I'm going to first start knocking off my losses. I only have one losses, which is my PGBP loss. This 7,50,000 of PGBP loss got set off against 2,30,000. So once I remove the 7,50,000 from 2,30,000, how much loss am I still pending? I got 5,20,000 ka loss. This 5,20,000 ka loss now I can set off against any head except for salaries, which means I have HP income, I can set off against HP. I have capital gains, I can set off against capital gains. I have IFOS income also, I can set off against IFOS income, except for this one. Against 75,000 alone, I can't set off because it is special tax rate income. That income alone will not be allowed for deduction purposes. So which means I'll now need to set it off against capital gains or HP. In order of priority, if you come and ask me, I will set off against HP first. Rahul, why are you setting off against HP? Very simple. Understand, capital gains ke liye I have past losses available with me. So it is better to not set off against capital gains, because if you set off against capital gains, my past losses will have to be carried forward. Better to set off against HP. Yes or no? Yes. So let's keep that in mind. Let's prepare the computation accordingly. Let's see if you're able to answer the question with me. What are we going to do? We're going to write the computation of people. So what is going to happen? I'm going to say computation of total income. Yes, I'm only going to create two columns because I don't have any internal adjustments and all to make. So let's make computation of total income, two columns for me. Yes, what is going to happen? I'm going to start from income from salaries. I'm going to start from income from salaries. People, nothing given in the question. Direct adjustment, directly take 35,20,000 rupees. Directly take 35,20,000 rupees. Next, I'm going to go to income from house property. Now, what is income from house property? I have 3-4 things, people. So let's put that properly first. I am going to add an additional page for my convenience. Yes, income from house property. I have properties, one in Mumbai. No, actually Mumbai is self-occupied. So let's take Jaipur first. Let's take Jaipur property. People, what is happening in Jaipur property? Jaipur property mein I have rent received of 3,20,000 and I have taken no loan for this, if I understand. Delhi ke liye I took a loan, Mumbai and Delhi ke liye I took a loan. Jaipur ke liye I have taken no loan, so therefore 3,20,000 can be taken directly. Yes, so take Jaipur minus 30% standard deduction. So Jaipur is going to be 3,20,000 minus 30%. Answer came to 2,24,000. 2,24,000. Yes, good. Next, move on to Delhi. Move on to Delhi. Again, what I'm going to do, people, taking Delhi property minus 30%. What is Delhi property given to me? Delhi property comes and says I have an income of 5 lakh rupees. So 5 lakh rupees pe 30% gone. Answer became 3,50,000. Yes, on this 3,50,000, I have two kinds of loan given to me. So I have loan coming from purchase. I have loan coming from purchase. What loan is there, people? I have taken a loan of total 15,25,000. In that 15,25,000, payment of interest is only 7 lakh rupees. So take 7 lakhs out. Take 7 lakh out. Next, I'm going to have one more. What is this? What is this? I have another Mumbai property. If we have already done it, people. Yes, Delhi property, 75,000 is coming from here. So take 75,000 also. So I'm going to take loan for repairs. 75,000. Knock off, knock off. 3,50,000 में से if I remove 7 lakh rupees minus 75,000, answer comes to 4,25,000. Yes, notice I am going to have a loss of 4,25,000. But I'm not done here because I have an SOP property as well. So let's take my SOP also. I'm going to take Delhi SOP. Restricted amount, my friends, is going to be 30,000 rupees. Restricted amount is going to be 30,000 rupees. So with this, I am done with question number 4. I'm done with question number 3. I'm done with question number 5. All those things have been taken into consideration of. Correct, my friends? Any doubts on this part? Good enough to go? Yes, good. 30,000 rupees has been added, which means my losses which I have is going to be 4,55,000. Is going to be 4,55,000. Now notice carefully, I have an income from HP. Can I set off against loss from HP? Yes, I can go forward. So therefore 2,24,000, if I reduce off, answer becomes 4,55,000, which means I have a loss of 2,31,000. I have a loss of 2,31,000. Now, Rahul, why are you keeping it in this column? Should you not move it to the next column? HP loss can be set off. No. People understand when it comes to HP loss can only be set off against other heads, maximum 2 lakh rupees. So what am I going to do? I'm going to say maximum set off. I'm going to say maximum set off. I'm going to reduce 2 lakh rupees in my maximum set off in the last column. That is what we're going to do. Upon what happens, people? The balance 31,000 will get carried forward for 8 years. The balance 31,000 will get carried forward for 8 years. Now, Rahul, where is this 2 lakh going? This 2 lakh is going to get set off against your salaries. Rahul, why are you setting off against salaries? We discussed in class also, people. When it comes to HP loss, always prefer to adjust it against salary first, because salaries does not get adjustments against any other losses. Salaries can only be adjusted against HP when it comes to your CA inter-syllabus, and therefore ICI prefers that HP loss always gets knocked off against salary. So I'm directly putting it like that. Clear? Yes, with this my HP is done, people. Now let's proceed forward. I have your third item. Do I have any PGBP loss? Yes, I have PGBP loss. So what am I going to do? I'm going to take my PGBP loss. My salary is done. My rent is also done. Let's take my PGBP loss. My PGBP profit is there of 2,30,000. Yes, so under that what I'm going to say? I'm going to say speculative profit. Speculative profit is 2,30,000. Minus loss from business. Minus loss from business. How much loss from business is there? I have a loss from business of about 7,50,000. Of about 7,50,000. Now, people, can I claim full 7,50,000? No. So what I'm going to say? Restrict it off. How much am I going to restrict to? 2,30,000. I'm going to restrict it off to 2,30,000. That is the maximum I can restrict off. Well, what happened to the balance? Wait. We are going to go to capital gains. Let's adjust it off in capital gains. Yes. So let's put it in capital gains. That is what we're going to do. Yes. Done. Let's move on to CG. Let's move on to capital gains. Now, what do I have in capital gains, people? Question I think came and said I have LTCG under section 112A. I have LTCG under section 112A. How much is the LTCG under section 112A? I have LTCG of 7,95,000. Is it so? Yes, I have an LTCG of 7,95,000. Yes, now here you have to play a little carefully. Little carefully, people. If you get the right answer, then amazing. If you have not, then look at this very carefully. People, now if I notice this carefully, I have some PGBP loss. How much PGBP loss do I have? I have a PGBP loss of 7,50,000, in which 2,30,000 is gone, which means 5,20,000 I have. Now I should have adjusted against HP, but HP itself showed a loss. Can't do much about it, which means I have to knock off against capital gains. Now notice carefully. In capital gains, I do have capital gains past loss also. Apo, can I set off the past loss first and then set off current year PGBP? No. If you notice, people, we have discussed this in class, and very important thing is that when you have intra-head, inter-head and past losses, the sequence remains the same, which means it's always intra-head, it's then inter-head, and only then the past losses. When you have a PGBP loss available with you, the order of set off is first PGBP will get set off, then only you can bring your past losses. Rahul, bringing past losses will help me better. I can carry forward PGBP for fresh 8 years. No, that is the reason why they're avoiding it. And therefore, first PGBP only has to be knocked off here. You cannot knock off anything else. Be very, very careful about this. But at the same time, I want to claim the maximum amount of benefits. I want to adjust my capital gains also. In which case, notice carefully, I have some IFOS income in the question. 73,000 worth of IFOS income is there with me. In that case, why would I knock off my full PGBP loss spending with only the capital gains? I would first like to knock off 73,000 against IFOS. That will make it easier for me, because if I knock off 73 against IFOS, I'm reducing lesser claim against capital gains, making me my option to again set off this capital gains properly. Yes, it's a little tricky, people. You have to play around a little bit, and that is why I keep telling you, before you start writing the question, if you don't analyze the question properly, you will not get the right answer. Yes, so be very, very careful about this. Oh, by the way, 1 second, I have made a small mistake. I have PGBP. I have one more PGBP here, people, so I have to take this into consideration, which means I've made a small mistake here. I'm going to carry this forward to a little bit more down. Give me 1 second. Yes, I'm going to take my additional profit as well, my income of partner's profit, partner salary. Take my income of partner salary. This is anyway exempt. Yes, so it's going to be partner salary. Partner salary of rupees 50,000 is also going to get added, which means 2,80,000 is what I'm going to knock off. 2,80,000 is what I'm going to knock off. Now, notice what is going to happen. Out of 7,50,000, 2,80,000 is gone. 7,50,000 में से 2,80,000 gone. 4,70,000 is what I have in my hand. Now this 4,70,000, what I'm going to do? I'm going to first not adjust it against my capital gains. I'm going to first adjust it against the 73,000 of IFOS, which means for capital gains purposes, I have only 3,97,000 in my hand. So my set off of PGBP loss is going to be how much? It's going to be 7.5 lakhs, which I had, minus the 2.8 lakhs, which I already adjusted, minus the 73,000, which I'm going to adjust against my IFOS income. Correct? Not correct? Yes, that is what I'm going to do, leaving me with an answer of 3,97,000. I hope you get this, people. Yes, this is where you have to play a little carefully. Now, Rahul, what if you would have not done the 73,000? You could have left it as it is. Very simple, people. If you would have not done this, then what would have happened? Maximum adjustment here. IFOS ke liye you don't have any losses in hand. Therefore, to that extent, your income would have been higher. I don't want that much higher income, and therefore, I'm trying to be careful here. Nothing else. Yes, so 7,95,000 is being done. Answer is 3,98,000. With my 3,98,000, now I'm going to set off my past losses. I'm going to set off my past losses. How much do I have? I have 2,75,000 plus 25, which means about 3 lakh worth of loss do I have in my hand. So 3 lakh worth of loss is what I'm going to set off. So reduce 3 lakh worth of loss in this. Giving me the answer is 98,000. Giving me the answer as 98,000. This is what the right statement is. Clear, people? Clear enough to go? Yes, be very careful. Next, I'm moving on to part number 5. Part number 5 being my IFOS. Now, in IFOS, if I remember, there were 3 things. One is your lottery income. Lottery income is anyway going to be taxable as it is. Can't do much about it. So, take your lottery income. Lottery income is going to be 75,000. Take it as it is. So, lottery income goes to the right, which is 75,000. Next, I have interest on FD, which is going to be 73,000. But in this 73,000, I'm going to say less set off of PGBP loss, which means reduced to 73,000 rupees. Answer hits to me 0. Answer hits to me 0. And with this, I think I'm done with all the adjustments of, yes, all adjustments are done, which means now I can total my incomes. Now I can total my incomes. Help me out with my incomes, people. What is going to happen? 35,20,000 minus 2 lakh rupees of my HP loss minus 90, by minus 35,20,000 minus 2 lakh rupees plus 98,000 plus 75,000 gives me the answer as 34,93,000. Gives me the answer as 34,93,000, and this becomes my GTI. This becomes my GTI. I hope this was clear, people. Yes. Now, in case if you go by this, if you come and ask me, Rahul, even if you would have not done the 73,000 against the HP, against IFOS, but you would have rather done it against capital gains, will your answer change? Luckily not in this question, people, because my capital gains loss was not enough. The 3 lakh worth of capital gains loss was not enough, so it was still fine. Even if you would have not taken it that way and you would have put it here, I think the answer would have not changed. Your GTI at least would have not changed, but it's not about GTI. You need to show the proper income reportings accordingly, because at the end of the day, I would like to tax something under 112A more rather than taxing something as IFOS. IFOS would have been taxed at 30% based on slab concept, whereas this is only going to be taxable at 0 rates. Yes, so to that extent, I would rather prefer you keep it like this, not do it that way. Now, as a person who is probably in the field of practical world, I would also come and tell you there is an alternate view on this. Notice this carefully. My LTCG is 112A, right? If my LTCG is 112A, I am actually okay to not report 98,000. I am okay to report it up to 1,25,000 as well. Yes, so by that logic, what I could have done is I could have come and said, anyway, what is the point of reporting 98,000? I am okay to report income up to 1,25,000 because anyway tax on that is 0. And so by that logic, what I can do is I can also come and say my PGBP of 3,97,000 need not be set off to that extent. I can increase my losses to that extent and I can carry forward so much of losses. Can you do that? Answer is no. A horrible no. If you're thinking on that logic, Rahul, I'm smart as I can do 1,25,000 here. No. People, when you have losses, it is mandatory for you to set off. Can you do these kind of nonsense? Answer is absolutely not. You will not be allowed. And therefore, this question is extremely important. A tricky question given from RTP side, testing you on multiple things. So yes, keep this question intact. Do this properly. Clear? So with my GTI out of the picture, I can now claim my chapter 6A reduction. If I remember this chapter 6A reduction, there were only 2 components. One was my repayment of loan. Second was my insurance premium paid. Now what happens, people, is when you take the repayment of loan is about 8,25,000. Insurance premium is about 15,000. Overall ATC itself allows only 1,50,000. So 1,50,000 is the maximum I can set off in this conversation. So reduce 1,50,000 from this, and therefore the total income getting reported is 33,43,000. The total income getting reported as 33,40,000, and this is what the statement is. Clear enough, my friends? Yes, it's a little lengthy. I'm not doubting it. A little tricky. And yes, I know why you skip off question number 6, because these kind of things become confusing. But it takes a bit of an effort, people. A small effort from your side to notice what losses look like, and you will get the answers properly. Every time you do a losses question, like I recommended, never complete the question before understanding the question first. Only if you understand the template first can you do the questions properly. Otherwise, these kind of mistakes can happen. So be very careful on this question off. Clear enough, my friends? Shall we proceed forward on this? Yes. Good. With this question number 1 being out of the picture, I think now we can move to question number 2 and all a little faster because you've got that template format. So let's understand the template. Same template you're going to follow. Let's do it together. Question says, I am Mr. Gagan, classical singer Bengal, and his wife Rashmi, furnishing the following information. There is two parties. One is Gagan, one is Rashmi. Always people, when these kind of questions comes, always read the last line first. Last line will tell you what is going to happen. It says, compute the taxable income of Gagan and Rashmi if they want to pay tax under DTR. They've confirmed that the person wants to go for DTR scheme. Very, very important. Keeping that in mind, it says income of Gagan, professional singer, is 5,65,000, taxable for Gagan, taxable under PGBP. Salary income of Rashmi will be taxable under salary income. Question says computed. Computed matlab standard deduction already granted. Next, loan received by Mrs. Rashmi from XYZ Private Limited. Rashmi holds 35% shares of the company. Company has incurred losses since inception. Adjustment which most of the students never end up realizing because they see the word loan and they start coming and questioning how does it matter. They say, Rahul, I have only received loan. No, how does it matter? It does matter, people. It's a very, very subtle small adjustment which we have already discussed in class multiple times. A section called as 222E. Deemed dividend concept. Deemed dividend comes and says that if you are holding more than 10% voting power in any company and that company gives you a loan, then that loan which you receive will become a deemed dividend only to the extent the company has accumulated profits. A very critical part, people. 2,50,000 worth of loan you have received for a 35% shareholding. It is taxable under IFRS. Unfortunately, here is the case where it will not be taxable because of the fact that the question says they have been incurring losses. They have been incurring losses. Correct, not correct? Yes. So just be very, very careful on this as an adjustment of you don't have to tax anything here because you have incurred losses on this case. Yes. So that is why even if in this question you would have made a small error and you would have said, Rahul, loan received, how does it matter? Let's take it as 0. You would have got the right answer, but for the wrong reasons. Yes, for the wrong reasons is what you're going to get the right answer. So please be very, very careful on this as an adjustment of mark it as LDR, people, for you to keep in mind. Next, it says income of their minor son Gaurav from winning singing reality show. People, when it comes to minor child income, you have to ask a question. Any kind of income of minor child is clubbed in the hands of parents, provided 3 conditions are not satisfied. Condition number 1, if I have taken this, if the income is received by minor child based on a manual skill or talent. Second, if it is coming because of any labor skills. And third, if it is a child which is handicapped in nature. In that case, you will not club the income. Notice it is coming from singing reality show, which means it is because of talent and therefore this will be taxable for the child. When it is taxable for the child, parents do not have to care about it. Parents can ignore it off. Next, cash gift received by Gaurav. Gaurav is the child from the friend of Mr. Gagan on winning the show. So which means Gagan father's friend is giving gift to Gaurav for winning the show. Normally speaking, it is minor child clubbing income. Yes or no? No. Here is where you will end up making the same mistake again. Notice carefully, people, for clubbing rules, first of all, you have to satisfy the condition. What does IFOS come and tell you? IFOS comes and tells you that when you receive a gift in cash, you should receive a gift exceeding 50,000 rupees. Here is a case where the person is only receiving a gift of 21,000 rupees, which means anyway the gift quantum is less than 50,000. By that logic, even the child itself was not taxable for it. Why would you tax Gaurav on this? Yes, so Gaurav is not going to be taxed. Gagan is also not going to be taxed because the limit has not been crossed. This is exempt. This is exempt. Clear? Yes, be very, very careful, people. Limits, we have discussed it in IFOS also, if you remember in the assignment series. 3 things for you to keep in mind: your nature of asset, your amount, your exemption rule, and third, your amount received. So be very, very careful on this adjustment of, people. It's a critical adjustment of. Clear? Next, last one says interest income received by minor married daughter Kavita from deposit in private limited XYZ 40,000 rupees. People, again, minor married daughter will be clubbed in the hands of parent whose income is higher. So this income has to be clubbed off. However, keep this in mind that because the question says that the persons are going for DTR, in that case, I don't have a problem. When they are going for DTR, full 40,000 is going to be taxable for the parent whose income is higher. Normally, in this case, because it is minor, you would have to give a 1,500 ka exemption. No exemption will be granted here because the person is going for DTR scheme. So which means only 3 incomes are going to be taxed, which is these 3. Simple, straightforward. You can directly complete the question off in one single line, people. You don't have to put efforts into this question itself. I'm going to create 2 columns. One column is going to be Mr. Gagan, I think. Yes, one column is going to be for Mr. Gagan. The other column is going to be for Mrs. Rashmi. What is going to happen? I'm going to say first Rashmi has received salary income. So let's tax salary. How much has salary been received? 3,80,000 worth of salary has been received by Rashmi. Next, I'm going to have my PGBP income. How much has Gagan received as PGBP income? Gagan has received 5,65,000 ka PGBP income. Lastly, I'm going to IFOS. I'm going to IFOS, minor married daughter. Minor married daughter will be clubbed for whom, people? Very obviously will be clubbed for Gagan, because Gagan's income is higher. So club it here, and therefore the final taxable income should be 6,05,000. The final taxable income will be 6,05,000. Here it will be 3,80,000, and that's it. This is the question. Simple, straightforward. Now imagine this question came in MTP for 6 marks. 6 marks, people, to write 3 adjustments. Now, Rahul, are you going to get 6 marks for writing these 3 adjustments? No. Unfortunately, people, I've discussed this so many times in classes that even for adjustments which are going to skip off the 2,50,000, the 2,50,000, the 21,000, you need to write proper notes. Please write your proper notes. You need to write a note for 3 where you will come and say this is no more deemed dividend because the company has been incurring losses. For 2,50,000, you will say it is not to be clubbed because it is taxable in the hands of minor child because of a talent. And 21,000, you will say it is not going to be taxable as a threshold of 50,000 has not been crossed. Writing these 3 is extremely important. Yes, so which means you have to put some notes out here, people. Now again, because we are doing the sum only for analysis purposes, I'm not putting out the notes, but you have to write the notes properly. Write your notes. I'm going to put it out here where I'll say write all notes, so that you know when you refer to this document that you have to write all notes properly. Please keep this in mind. Clear? Yes, otherwise straightforward question, people. Any difficulty on this part? Shall we proceed forward? Chalo, let's proceed forward. I'm going to go to question number 3. Question number 3 comes and says, I am Mr. Mayank, age 65 years. See, here is where my first trigger point is. I see the person, I'm going to say the person is a senior citizen. Now this is going to make a lot of changes, people. Multiple places, multiple things will come in, so always keep in mind. It says Mayank is 65 years, resides in Hyderabad. Following information has been given to you. Go to the last line. Last line says you're required to compute the total income under normal provisions. See, person is going for normal provisions. ATR has been chosen. ATR has been chosen. Be very careful on this. Next, I'm coming to the facts. Let's look at the facts carefully. It says, first, I've received pension income. Now, here is where you have to make a suitable assumption. Notice it says pension. It does not say whether pension is computed, not computed. It doesn't use the word income from salaries. When it doesn't use the word income from salaries, it is good enough for you to make an assumption saying pension is part of salaries and salaries is not confirmed, which means I need to give a standard deduction. I need to give a standard deduction. Clear? Yes, keep that in mind. Next, it says interest on bank of fixed deposits 55. Here is where the challenge comes. Here is where you need to keep in mind that you will claim 80 TTB. Rahul, what is 80 TTB? A resident senior citizen gets a 50,000 ka deduction. Yes, very important. That is why, people, when you start itself, if you trigger that only will you remember this. Be very careful on this as an adjustment of. Next, income from speculative business, normal PGBP income because it is income from speculative, doesn't matter. Long-term capital gains from sale of urban land, people, 112. Urban land is taxable, rural land is what is exempted. Long-term capital loss from sale of listed shares in recognized stock exchange. I have a loss coming in from 112A. Can I set off long-term capital loss against long-term capital gains? Yes, I can do that. Yes, I can do that. There will be no problem whatsoever. You will be permitted to set off. All 112A has special rules. That has a special rule. No. 112A, any long-term capital gains can be set off against long-term capital loss and vice versa, whatever it is. Next, loss from card games, fully ignored. People, this is winnings. Winnings may say you can't have any kind of losses. Next, income from betting. This is going to be fully taxable. I'm going to take it under IFRS. Rahul, can I set off income from betting and loss from card games? No. The moment you saw loss from card games itself, you said ignored, because in income tax, we have confirmed and we have understood this together. You cannot claim any expenses against winnings income. When you don't have any expenses, there is no opportunity for you to have loss itself. This itself is a wrong understanding and therefore it is to be skipped off. It is to be ignored. Clear? Good. Next one says life insurance premium is paid by check for insurance of his life. Policy was taken in 16. Sum assured is 2 lakh rupees. People, when this policy is taken after 2012, I can only take 10%. This is 20 to 500, which means I will only claim 20,000 rupees under section 80C. Next, premium of 26,000 has been paid for health insurance of self and wife. Next place where you will end up making mistake. If you don't remember the fact that the person is a senior citizen, you will say restricted off to 25,000. No. No restriction will happen whatsoever because you are a senior citizen. You can claim deduction up to 50,000 rupees. You have only paid 26,000, so you can claim 26,000 as a deduction. 80D comes into picture. Next, sum of 15,000 is donated in cash to an institution approved for 80G. People, two things. One is you see donation, you say 80G. But problem is before you go for donation, notice this word. Notice this word. It says donation is paid in cash. Cash became an issue because you cannot donate more than 2,000 in cash. Therefore, I will ignore, skip, that's all. Directly skip off. That is what the statement is. A very easy question, people. You should not have taken efforts into this question itself. Can be easily done off. I can finish it off in 1 minute for you. What am I gonna do? I'm gonna say start from salaries. Salaries was how much? I got 6,60,000 ka salary. Reduce how much, people? We are in old tax regime. Normal provisions has been asked, which means I will reduce 50,000 rupees as a deduction. Number hits me as 6,10,000. Next, what else do I have? Do I have any other incomes? Do I have any business income? Yes, I have PGBP income. So I take my PGBP income into consideration. What is my PGBP income? PGBP income is given as 40,000 rupees. PGBP is given as 40,000 rupees. Third, I have my capital gains. Now, what am I going to do, people? First, I'm going to say my long-term capital gains under section 112. What is my long-term capital gains under section 112? My long-term capital gains was given as 2,50,000. In this 2,50,000, I'm going to set off my long-term capital loss. Long-term capital loss was given as 1,10,000 rupees. So I take that into consideration. My income becomes 1,40,000. My income becomes 1,40,000. Yes, what else is there, my friends? We have moving on forward to other items after capital gain. So we are done with pension. Now, Rahul generally has a practice to take all these things. Should you do it? Yes. It always helps you remember what and all has been completed off. So I have done this, I have done this, I have also done this. With that, I am only pending with two incomes. One is my IFOS income. So let's take my OS income into consideration. OS is of two types. One, I have FD interest. Second is what I have winnings. What is my FD income? My FD is given as 55,000. My winnings is given as 45,000. So yes, 55,000 of FD, 45,000 of winnings. Totaling the number, answer comes to 1 lakh. Answer comes to 1 lakh. Let me add a page. Yes. What else is left, people? With me, this is done. Anyway, I'm going to ignore. Betting is also going to be ignored. Everything else has been done off. Yes, which means I can now move on to my GTI computation. So let's put my GTI out. What is my GTI? Quickly help me out. What is my GTI? My GTI has come as 6,10,000 plus 40, 6,50,000, 6,90,000, 7,90,000, 8,90,000. 8,90,000 is my GTI. Yes, with this, I'm simply going to claim my chapter 6A deductions. So let's put my chapter 6A deductions. What is my chapter 6A deductions? If I remember this properly, I had ATC of about 20,000 rupees, which I could maximum claim. I had my ATD, which is about 26,000, which I could have maximum claim. And then I have my very important ATTTB of rupees 50,000 because my FD is fully allowed as deduction. So therefore, this is my total. So 50, 76 and 96,000 is what I can claim as my deduction. With 96,000 out of my picture, my total income is as follows. What is my total income? 8,90,000 में से 96 किया तो 7,94,000. 7,94,000, and that is what the question is. Simple, straightforward, people. Yes, no difficulty whatsoever. This is what the question is. Very easy question. You could have easily scored it off if you have done the adjustments properly. Now, this is nothing relating to what is coming from your clubbing and Setoff. Technically, only one losses question was there. Everything else was coming from chapter 6A. Everything else was coming from your capital gains and all those things. So, ideally, if you're studying for question number 1, this should be a question you should anyway be able to answer. The fact that cash is not allowed under ATG and all is a question which will anyway get tested in question 1 also. also. So there is no reason for you to skip these kind of questions. It should be a mandatory question that you should answer. And trust me people, if you put a little bit of an effort, 3-4 times you do it, no, you will definitely get this chapter off. You cannot skip this chapter off. It's that easy. It just takes that nuances, small things that you have to keep in mind from your examination perspective. I'm anyway marking them as LDR for you so that you never make a mistake on those. Be very careful on those adjustments of. I think in the previous one also we marked an LDR. That's all. Yes, keep marking this LDR and you read this for examinations. You're already through with the examination. No more difficulties are going to come in. Clear? Yes, good. Chalo, let's move on forward people. 3 questions we have done, 45 minutes is taken. I've told you we're going to keep this video a little lengthier because it's important. I want to do every question patiently with all of you. It's like practicing for your examinations. So yes, stay with me. Stay with me people. That is what my small request is. Shall we proceed forward? Chalo. Question says, I am Mr. Sanju, individual assessee, 32 years. Again, I am noticing 32 years. Person is going to be a normal citizen. Furnishing the following details to you. I am proceeding to the last line. Last line says, compute the total income if exercises the option of shifting out of default tax regime. My friend is going for ATR. Keeping that in mind, always start from losses. Chalo. Question says loss from future and options. Now this was May 2025 question people, where ICA for the first time started asking weird questions, and one mistake most of the students made. Students saw this loss from futures and options and they said, Rahul, speculative loss can be set off against speculative profit. No. F&O is a derivative instrument and derivative instruments are not treated as a speculative transaction. They are normal business transaction. ICI has now very explicitly confirmed it to all of you that unless they use 2 words, one is they say loss from speculation, then it is obvious. Second, they will use the word loss from intraday trading. Unless they use the word intraday trading, it means every other losses that you're going to have is going to be considered as normal loss. It will not be considered as your speculative loss. Therefore, no restrictions on this LDR. Very important. This is a normal PGBP loss. Normal PGBP loss people can be set off against any head other than salaries in the order. Yes. Next, profit from restaurant business. Can you set off? Answer is yes. You can set off. This is going to be set off. Correct. Next, share of profit from a partnership firm, fully exempted. Doesn't matter, fully exempted. Next, income from salary which is computed 3,15,000 to be taxed under salary, straightforward. Interest on loan paid for self-occupied property 1,75,000. Principal amount paid is 1,20,000. 1,75,000 goes under HP. Principal amount goes under ATC. I mean old tax regime. Short-term capital gains is given. Okay, great. Long-term capital gains is given. Okay, great. Long-term capital loss is given to be set off against long-term capital gain. People, can I set off against short-term because it has higher tax rate? No. Long-term loss, only long-term gains. Rule of thumb. Next, his wife has received salary of 2,40,000 from a partnership firm of Excel & Co. Excel & Co. I saw here. See, Excel & Co. Same company, same partnership firm. Where she is an accountant, she does not have any professional qualification. Now, this is where you got tricked. May 25, beautiful adjustment question. What happened is, normally students have learned this fact that if a spouse is working in a concern where they don't have a specified qualification, then the income should be clubbed in your hands. True, I don't deny the fact, but the condition also says that they should have substantial interest in such concern. Notice they have very subtly, very beautifully come and put it here, saying that they only have 19% share, which means the 20% threshold cutoff has not been satisfied. When the 20% cutoff threshold did not get satisfied, in that case, you cannot be clubbing this income. This is taxable for the wife. I'm going to ignore. I am going to ignore a very beautiful adjustment people. Why? Because 19% is not satisfying the substantial interest condition. A very small adjustment and you would have made a horrible mistake on this. Please keep this important. Sometimes keeping eyes everywhere is extremely important. When you read this adjustment, it should have triggered there. So yes, keeping your eyes across the question is very critical. And this is what I keep telling people. Unless you review the whole question before you move forward, you will make mistakes like this. So it's important to take that minute to review the question. Next, he paid 21,000 for medical insurance and 9,000 for preventive health checkup. What can I claim people? I am not a senior citizen, which means I can take 25 and 9,000 gets restricted to 5,000. 21 plus 5,000 becomes 26,000. I can only claim 25,000 ka ATD. Yes, so 25,000 is my overall restriction in ATD. Next, brought forward speculative loss is 26,000. Can you do something about it? No. Understand, speculative loss can only be set off against speculative profit. Here, there is no speculative profit itself. There is all normal profits, which means this will get carried forward again. Brought forward short-term capital loss of 52,000. Can you set off this against the capital gains? Yes, this is permitted to be set off. So therefore, this is getting adjusted in the current year. This is getting adjusted in the current year. State the losses to be carried forward. This is what the facts pattern is. Now, if I notice this, people, I don't think I'm going to have any losses to be carried forward. 75 is going to get adjusted. Only one speculative business loss alone is getting carried forward. Everything else remains as it is. So I think this question can be answered very, very easily off. Only problem was the LDR wala adjustment. Be very careful on this adjustment of. Shall we? What is going to happen? Do I have any income from salaries? Yes, I have an income from salary. What is my income from salary? This one is already computed. So 3,15,000 is going to be my income from salary. Next, I am going to have HP loss. So I'm going to directly adjust my HP loss here itself because I don't need a separate head for it. What is my HP loss given to me? My HP loss is given to me as 1,75,000. That's it. Yes. Next, do I have any PGBP incomes? Yes, I think question gave me my PGBP income. I had something called retail business. So my retail profit was given to me. What is my retail profit? My retail profit was 2,21,000. So my retail profit is 2,21,000 minus my losses from futures and option, which is 75,000 rupees. Help me out. 2,21,000 minus 75,000 rupees. Answer hits as 1,46,000. Answer it says 1,46,000. Very good. Now let's move to capital gains. In capital gains, I had two things. I think one was long-term capital gains. How much long-term capital gains did I have? I had a long-term capital gain of 1,10,000. From this, I'm going to reduce my long-term capital loss of 68,000. Now again, I'm going to ask you the same question. Notice, no, long-term capital gains is 112A. 112A is 1,10,000. You will come and say, Rahul, why would I want to set off? Let's not set off. No, what is the point of setting off? I would then rather lose this losses. 1,25,000. Anyway, it was not taxable. No, like I said, that is only at tax stage. At income stage, losses set off is mandatory. Can't let it go, which means this has to be taxed no matter what. 1,10,000 minus 68,000 hits me the number as 42,000. Hits me the number as 48,000. Let's proceed on forward. I think I had something called short-term capital gains right now. What was my short-term capital gains? I had a short-term capital gain of 82,000. Yes, in this short-term capital gain of 82,000, I'm going to set off my short-term capital loss, which is brought forward. So brought forward short-term capital loss is going to be set off. Brought forward short-term capital loss in my case is going to be 52,000. So let's set off 52,000. Giving me my income is 30,000 rupees. Correct till here? Let's proceed forward. My capital loss is also done. This one is also done. What else is pending? I think I've adjusted this. I've adjusted this. This is anyway getting exempted off, so it doesn't matter. I think we're fairly done. This one is anyway getting ignored, people, because we're not going to take this into consideration, and I think this is done. So with this, I can find my GTI of. Help me find my GTI. What is going to be my GTI? It says 3,15,000 minus 1,75,000 plus 1,46,000 plus 42,000 plus 30,000. Answer hits as 3,58,000. Answer hits as 3,58,000. In this 3,58,000, I can now claim my chapter 6A deductions. What are my chapter 6A deductions? If I notice from the top, people, I have an ATC coming up here. So 1,20,000 ATC is coming in. Then I have my ATD I have for 50,000 rupees, 25,000 rupees. So my ATD is also coming in from here. It's always important to write these kind of things, otherwise you'll always keep skipping it off. Yes, so I'm going to write my chapter 6A deduction. My chapter 6A deduction is going to be ATC of 1,20,000 and I'm going to have ATD of 25,000 rupees. Yes. Now, people, I'm making this extremely clear again and again. I know I'm repeating it, but for the sake of convenience, I'm repeating it. Whenever Rahul is writing answers directly, does not mean you can follow the same template. You have to write notes here. ATD has to come and clarify saying preventive health checkup was restricted to 5,000, overall restriction of 25,000. When it comes to ATC, you can write repayment of housing loan. When it comes to other items on the top, items like your F and O loss, items like your F&O loss, you will have to mention this saying that F&O is not a speculative business. All those things are bare minimum. Apart from that, the two adjustments that we ignored of adjustment of preventing a share of profit to be exempted, adjustment of wife salary to be ignored, all these things have to be written as notes. Writing notes carries mark. Rahul, you're writing it like this. Can I follow the same template? No, do not do it. I'm giving you the template on how the presentation should look like, but does not mean that I'm writing notes. Notes are important. You have to write all those notes carefully. Not writing notes will lose you marks. Then comes the problem, people. Later on, you write the question, you get the final answer. You start putting YouTube comments saying, Rahul, I wrote the complete thing, I got the final answer, still I'm only getting 40, 41. Reason is because you did not write notes. Yes, when you get your RTI copy, you'll realize that what IC has given in suggested answers vis-a-vis what you've written does not really match. And then you start blabbering saying, Rahul, last answer matched. I know I'm being rude here. I want to be rude. It doesn't matter. Yes, last answer matching is not the concern. Even if you don't get the final answer properly, for your steps, you get good marks only when you write notes. So be very, very careful on writing your notes. So be extremely cautious on that. So 1,45,000 worth of deduction I'm going to set off. Giving me my final total income, 3,58,000 I had minus 1,45,000 income. Answer is going to be 2,13,000. Answer is going to be 2,13,000. Yes. Now, one thing which you probably do have to check in this question, luckily you don't have to worry about it, but I'm clarifying this. This is one checkpoint which I always tell all my students to keep in mind, is that once you write this answer as 2,13,000, once you get your total income as 2,13,000, always ensure that this income is more than your slab incomes. Is more than your special incomes. Always ensure that, because for those who know, people, when you claim chapter 6A deductions and everything, your chapter 6A deduction can never cross your slab incomes. It can only be maximum of slab incomes. Special incomes, including capital gains, cannot be set off against chapter 6A deduction. So every time you give this adjustment, always keep in mind that this 2,13,000 should bare minimum at least be my special incomes. If you notice in this, my special incomes are capital gains. I have 42,000 worth of capital gains here in my LTCG. STCG has been confirmed as normal short-term capital gain. Therefore, it is not a problem. But the LTCG of 42,000 is the bare minimum, which means if I would have given you a scenario, imagine a scenario that after claiming chapter 6A reduction and all, this number would have come to 36,000. In that case, can you report 36,000 as the answer? No, you cannot report 36,000 as the answer. In that case, you will say, I have extra claimed chapter 6A, which I could not have claimed, and therefore 42,000 is the only number which I can have. 42,000 is the bare minimum number that I have to report, because I could not claim chapter 6A on my capital gains. Clear enough for you to go? Yes, be very, very careful on that adjustment, people. A very important thing for you to keep in mind. Yes. Good. This is my final answer on 2,13,000. I hope you understood how we did this question off. Yes, my friends, good enough to go. Chalo, theek hai. We are done with question number 4. I think we are done. We are there at question number 5. We are going at a good pace, people. I hope you are able to manage it along with me. If you're able to match these answers, and if it is already giving you the right answer as what we have been discussing, thumbs up to all of you. Please do mention it in the comments as well, telling me how many adjustments you have made a mistake. It helps you to know, people. When you write all your mistakes, when you note down your mistakes, when you show it to the world, you will always have the guilt to ensure that you never make this mistake once again in exams. So yes, as you're going through with me, if you're noting down any mistakes, please prepare a separate module where you can note your library of mistakes, or put it in the comment section as well, so that when you write it down, you have the guilt that you will never make this mistake once again. Clear? Chalo. Yes, perfect. We're moving on to the RTP of September 25. Now, as much as RTP May 25 was lengthy, September 25 also looks lengthy. So yes, they have put a lot of efforts. Let's review this question very peacefully once again, same as May 25, and let's prepare a proper sequence. Yes, good. So Mr. Suraj is aged 40 years and is submitting the following information to you. Yes, again, person is given as aged 40 years. Matlab, my friend is going to be a normal citizen. I don't have to worry about him. Let's look at the last line. The last line says, compute the total income of Suraj for the, assuming Suraj income is higher than Mrs. Suraj, which means husband's income is going to show higher before including the minor child's income. Suraj is exercising the option of shifting out of default tax regime. My friend is going for ATR. Yes. If you notice by now, people, my template is always the same. I always follow the standard template because it always helps me get the right answer. So yes, I'm going to do the same thing. If you can learn my template and you can do it the same way and I can, why not? Probably you can clear faster. Yes. Question. It says he is employed in ABC Limited and has earned a salary of 10 lakh 50 taxable under the head salaries. Already the word computed is given. Matlab no standard deduction is granted to you. He is engaged in speculation and non-speculation business. He has earned a profit of speculation, suffered a loss from non-speculation. Same adjustment that we marked as LDR. If you notice, people, speculative profit has no problems. Non-speculative profits can be set off against any head, including speculative profits. Matlab knockoff is permitted. I will set off it. Next, he reported short-term capital gains of 80,000. He's also received lottery winnings of 20,000. 80,000 is my STCG. Lottery winnings is going to be IFOS income. Brought forward long-term capital loss of 30,000 rupees, unfortunately to be carried forward. Long-term capital loss can only be set off against long-term capital gains. No LTCG given here. Carry forward. Suraj has 2 children. One married daughter is age 17 years and one son age 16 years. Interest income of Riya and Raj is 1,200 and 2,000 per month per annum respectively. People, minor child income, question is clarified that Mr. is going to have higher incomes to be clubbed off. But notice, because Raj income is only 1,200, Riya's income is 1,200, I'm going to grant an exemption of 1,200 completely. I will not be waiting for it itself. I am exempted up to 1,500, 1,200 is going to be directly exempted off. Raj income 2,000 rupees may save, 1,500 will get exempted off, balance 500 is going to get taxable. Next, he transferred a flat to Riya on 1st April 25 on account of natural love and affection. This flat was let out from that date and generated a rental income of 5,000 per month. People, here is where you have to be extremely careful. Notice, this is a transfer of flat to Riya, transfer of flat to minor children. Two things which students always end up getting confused. When they say a transfer of flat and this is a minor children, they start taking this 5,000 per month multiplied by 12, 30% reduction, all that is fine. But they will also apply 1,500 exemption on clubbing. Now, if you notice, 1,200 has got exempted there. So balance 300 is available to you. Can you adjust it here? No. Understand, this is the most important thing. This is something which we discuss in class so many times, that when it comes to these kind of topics, there are two separate concepts. One is called as deemed ownership and one is called as clubbing of income chapter. If you notice, this is a case of deemed ownership or clubbing of income becomes extremely critical. How do you check, people? You will have to check what is this minor child. Is this minor child married or not married? Deemed ownership conditions come and say transfer of any house property to a minor children will deem him as ownership under HP chapter. No clubbing rules will apply. But HP chapter also confirms that I will not do HP chapter on minor married daughter. Notice, this one says that Riya is married here. This one says Riya is married here, which means here clubbing income is what is going to apply. I will not apply deemed ownership concept. I will apply clubbing rules here. Yes. So here is a case where you have to be careful that clubbing will apply because it's a minor married daughter scenario. If it was not a minor married daughter scenario, I would have not applied clubbing. I would have gone to HP. And if I'm going to HP will say don't allow any kind of clubbing adjustments, directly tax the income as HP income. Full stop. That is what the statement would have been. Yes, be very careful. Next, Suraj has paid a medical insurance premium of 22,000 to insure his health and his spouse and his dependent children. 80D is what is going to happen here. Next, he has paid 33,000 to ensure the health of his mother who is not dependent on me. Again, 80D. He has also incurred 20,000 as medical expenditure, age 71 years, who is not dependent, not covered under any policy. He is not covered under any policy. I can claim again 33,000 plus 20,000, overall restriction of 50,000 I can claim. Overall restriction of 50,000 I can claim. The person has also contributed 6,000 towards central government health scheme. People, this 22,000 and the 6,000 will get clubbed together, which means I can maximum claim 3,000 because 25,000 is the maximum deduction. This is my fact pattern. In this question, the very critical thing for you to keep in mind was point number 6. If you do point number 6 properly, everything else has been easily understood by us already. Yes. So be very careful on this, people. And this is what the question looks like. I think this can be easily prepared off. Should not be much of a difficulty if you understand the template format carefully. Yes, so let's prepare the template along with me. What is going to happen? I'm again going to say let's compute income from salaries. Salary was given in this question. I think the salary income was reported as 10,50,000. Yes, reporting salary income of 10,50,000. Next, what is going to happen? I have PGBP income. Now, people, there are minor child incomes, right? Do you have to put minor child income in the same head? Your choice. Ideally, what happens is when you do clubbing of income, they don't confirm the last line to you. They don't confirm the fact that the husband's income is higher than the wife's income. In which case, what we end up doing is we first do the total income of the husband and then do all minor child clubbings. Here is a case where I would like to follow the same template in case this adjustment was not given in examinations. So no, I will not go and take this HP clubbing and all into HP chapter off. I'm going to put it in the last stages. Not going to put it right now. Let's keep that in mind. Yes, so with that coming into picture, I'm done with my salaries. Let's look at the next items. I have PGBP and I have capital gains in my hand. Yes, so correct. So let's take my PGBP into consideration. What is going to happen? I have my PGBP income. What is my PGBP profits given to me? My PGBP profit is 60,000 rupees and my non-speculation loss is 40,000 rupees. I can set off. Yes, so I am setting this off. Answer becomes 20,000 rupees. Next, let's proceed on forward. I have, I think, capital gains in this question, if I understand this. Yes, I have a capital gains of 80,000 and then lottery income of 20,000. So I'm going to put my CG income of rupees 80,000 and I'm going to put IFOS lottery of 20,000. Yes, anything else, my friends? I think 3 is done. Let's proceed on forward. 4 is getting carried forward, so let's let it carry forward. Left off incomes are only the balance pendings off, so I'm going to now total this income accordingly. Let's total this income. It's going to be 10 lakh 70 plus 1 lakh 11 lakh 70,000. Yes, now am I going to call this as GTI? No, please understand, I have still not taken my clubbing of incomes, so therefore I'm going to say plus minor child clubbings. Going to say plus minor child clubbings. What is going to be my minor child clubbings? I'm going to take multiple incomes into consideration. First, I have a woman called as Ria. So let's talk about Ria, people, because Ria has 2 incomes. One is going to be my other sources, where Ria has confirmed it is 1,200. Next, Ria is going to confirm to me HP income. HP income has been confirmed. What is the HP income? HP income is given as 5,000. So it is 5,000 into 12 minus 30 percentage. Answer is going to be 42,000. Yes, so answer is going to be 42,000. What is it? It is 5,000 into 12 minus 30 percentage. Clear? Yes, now let's add the incomes. Adding of incomes becomes 43,200. On this, now I can claim an exemption. On this, now I can claim an exemption. Exemption is going to be 1,500. 1,500. So yes, 1,200 minus 1,500. Let me check. 43,200 minus 1,500. Answer comes to 41,700. Answer comes to 41,700. I hope this makes sense, people. Be very, very careful on this adjustment of. I will grant an exemption of 1,500 even on the HP income, because this was a case of minor married daughter. If it was not a minor married daughter, I would have not done HP income. I would have done, I would have not done clubbing. I would have done HP income, in which case I would have not given the 1,500 exemption. So be very, very careful on this. Next comes my other friend. Other friend is called Mr. Raj. So let's go to Raj. Raj is going to come and say he has an income of. Raj is going to directly report an income of 2,000 rupees. It was not 20,000, it was 2,000 rupees. Raj is going to report an income of 2,000 rupees. Raj is again going to get an exemption of rupees 1,500. Raj gets a taxable income of rupees 500. Yes, now again, it's not Raj, it's the person who's going to club his income, but nevertheless, you understood the fact. Yes, which means now I'm going to report my GTI. What is my GTI confirmed to me? I have 11,70,000 ka number. So it is 11,70,000 plus 41,700 plus 500. Answer hits me 12,12,200. Answer hits me 12 lakh 12,200. With this, I can now compute what is called as my chapter 6A deductions. So let's look at my chapter 6A deductions. What chapter 6A deductions do I have? I have already marked my things off, people. If you remember, I have taken chapter 6A deduction here. I have only 80D in my question. Yes. So everything else has been clearly moved on forward. I don't have anything else. Only 80D is there. If you notice 80D, 30 plus 20, 53 became restricted to 50 and 22 plus 6 became 25. So therefore, overall 80D deduction is going to be my 75,000. Yes, so I'm going to put 80D. Under 80D for self, spouse and dependent children, number is going to be 25,000, and for parents, number is going to be 50,000. Taking my total is going to be 75,000 card deduction. Let me check if there's any cash and all. Question looks way too simple. Yes, nothing is given in cash, which means all adjustments are allowed as deduction no matter what. So they 12,12,000 as it is minus 75,000. Answer hits me 11,37,200. Answer hits me 11,37,200, and this is what my statement looks like. This is what my statement looks like. Clear enough to go? Yes. So only one LDR adjustment, people, for you to keep in mind. Keep this LDR adjustment in mind and you should be able to do this question off no matter what. Clear? Clear? Yes. So which means, people, every question that we're doing is beautiful question. Every question has at least one LDR for you to keep in mind and you are able to do it properly for your examinations. Clear? Chalo. Question number 5 is done. 6 more to go. 6 more to go. 1 more hour, people. I think we're at 1 hour. So yes, 1 more hour to go. Stick with me. Finish it off. Question number 6. It says, on 14th June 2025, Rajesh Kumar has gifted a sum of 3 lakh rupees to his brother's wife Neha. I'm going to draw a diagram, people, for my convenience here. So there is a person called Mr. Rajesh. Rajesh has gone and given 3 lakh rupees to his brother's wife. Whose brother's wife? Neha. Next. On 12th July 2025, Rajesh Kumar's brother, so Rajesh's brother, which is Rakesh, has gifted 5 lakh rupees to the minor son of Rajesh Kumar. So now Rakesh is going to receive money from Rakesh. So here is a minor son. Here is a minor son. Okay. Both Mrs. Neha and minor son is investing the gifted amount in the fixed deposits on 1st August 2025 at an interest rate of 9% per annum. So if I have to just make this a little more presentable, I think Rajesh is going to give 3 lakhs and minor son is going to receive 5 lakhs. This is what the fact pattern is. Both of them are going to invest 9%. Assume Mrs. Anjali, wife of Mr. Rajesh's income, was higher than Mr. Rakesh Kumar's income and she has opted out of default tax regime. This is where the trick is. Notice carefully, people. Now, normally what would happen? Minor son income should have been taxable in the hands of Rajesh. But here is the question where question has come and confirmed that Anjali is the one who's having higher income than Rajesh. When Anjali is having the higher income as Rajesh, technically minor son is no more taxable. It is going to be taxable in the hands of Mrs. Anjali. Yes or no? Now comes the beautiful part. What is this nonsense, people? They are basically testing you on what we call as cross transfers. For those who remember cross transfer, people, a provision which is not there in your chapter of clubbing but is coming from a Supreme Court judgment, Keshavji Moraji judgment, basically comes and says when a person is going to gift something to the brother's wife and brother is going to gift something which is going to be taxable in the assessee's wife, in that case the incomes, to the extent they are common, will get clubbed with each other. Yes, which means here in 5 lakh and 3 lakh rupees, common income becomes 3 lakh rupees. On that 3 lakh, whatever 9% came. So which means here I am going to receive 9%. Here also I am going to receive 9%. In both the 9%, I'll ask a question. 5 lakh into 9% is going to give me 45,000. And 3 lakh and 9% is giving me 27,000. The common income in these two things is going to be 27,000. Yes, so to the extent of the common income of 27,000 will become taxable in the respective owners' names, which means even though Rajesh giving to Neha has no clubbing rules, Supreme Court confirms that because this cross transfer happened with a simple intention to avoid taxes, we are now going to continue clubbing, and therefore what will happen, to the extent of rupees 27,000, it will get clubbed in each party's hand. Yes, so you will say 27,000 is getting clubbed. You will say 27,000 is getting clubbed, and this is what the concept is. Question says, examine the consequences of the above transaction. What would be your answer if Rajesh's brother Rakesh gifted 5 lakh rupees? People, in this case, what will happen? Common incomes at 5 lakh rupees. When the common incomes are 5 lakh rupees, you will tax the same common income. 45,000 will be taxable in both the scenarios. Simple, straightforward. Yes, so in this case, what can happen? I can take the same pattern once again. 1 second. Let's copy and I'm gonna put it here. In scenario number 2, what is happening, people? In scenario number 2, the income is gonna be 5 lakh rupees on both the sides. I think that's what the question says, right? Rakesh gifted 5 lakhs. Yes, so it's going to be 5 lakh in both the scenarios, which means in this both the scenarios, answer is going to be 45,000, which is to be clubbed. Simple, straightforward. So we are going to tax 45,000 of clubbing here. We're also going to be taxing 45,000 of clubbing here. Clear, people? Yes, this is what the answer is going to be, and this is how you have to report the answer. So very simple, straightforward. 2 things you have to write here. First of all, you're going to write that the fact that because Anjali's income is higher than Mr. Rajesh, the minor child income is getting clubbed in the hands of Mrs. Anjali. Because it is getting clubbed in the hands of Mrs. Anjali, now comes the concept of cross transfer, and cross transfer comes and says whatever is the common income will be clubbed in the respective owner's hands, which means Rajesh is going to tax the common income of 27,000, Rakesh will tax common income of 27,000. In scenario number 2, Rajesh will tax 45, Rakesh will tax 45, and this is what the statement is going to look like. Simple, straightforward. Yes, write some English, people. Don't write diagrams and all. Example diagrams will not help. Diagrams is more for your understanding. Write the English properly, crisp enough, and you should get the full marks in this adjustment itself. Yes, good. Chalo. 4 more questions. Question in MTP number 2 comes and says, I am Mr. Sitish. Sitij is earning the following incomes and losses in the current year. I see losses, matlab going from losses perspective. You are required to compute the total income of Kshitij for 26-27 under default tax regime. DTR has come in, showing clearly the manner of set off and the items of carry forward. The return of income has been filed on 30th July. People, why is this information given to you? 30th July means this is on time. Yes, why is this information important? Because if the return is filed on time, only then can you carry forward the losses. Current year set-offs, past year set-offs and all is perfectly fine. But if you want to carry current year losses to the future, return has to be filed on time. That is why they've confirmed it to you. Anyway, the person is going for DTR, people. So let's look at the DTR. Now we are going to understand DTR scheme a little carefully because DTR may losses become a little trickier. So be very, very adjusting careful. Yes, what is it saying? Kshitij is given the following information. Income from salary is given. Now, people, again, it uses the word income from salary, which means 2 assumptions can be made. One, because the word itself is used as income from salary, standard deduction is already granted. Or you can say, no, I don't know whether standard deduction is granted. I may not grant standard deduction. Rahul recommends that when you see the word income, no standard deduction will be granted. Yes, because income from salary is the heading name. If the heading name is given, that means it's understood that it is already after standard deduction. So kindly don't grant standard deduction in this question. Next, long-term capital loss on sale of shares of ABC Limited. LTCG has been paid both at the time of purchase and sale. This is my 112A long-term capital loss. What is the rule, people? LTCL can be set off only against LTCG. Next, loss from let out property in Delhi. Loss from let out property in Delhi is a HP loss. And HP has a problem. HP problem under DTR is that if you have any HP losses under DTR scheme, then it can only be set off against HP income of that current year. If you don't have any more HP income of the current year, the loss will permanently lapse, which means I need to now watch out, do I have any HP incomes? If I have any HP incomes, I'm safer. Otherwise, the 75,000 is getting lapsed. Careful. Next, interest on self-occupied property, ignore. I am in DTR. DTR says no SOP losses, fully ignored off. Winnings from lottery ticket, IFOS income. Cost of acquisition for lottery tickets is not something you can claim itself. No expenses against my winnings income. Profit and gains from manufacturing business after deducting normal depreciation of 10,000 and additional depreciation of 4,000. First of all, you are in DTR. How did you claim additional depreciation? This itself is illegal. You're not supposed to claim additional depreciation itself, which means I'm going to add 4,000 to the statement of. Next, long-term capital gains on sale of property, section 112 comes into picture. Now this is the gains, and if I notice I have a loss from the top, can I set off? Yes, I am going to set off these two things. Permitted set off for you. I hope you made sense. Yes, good. Now, if I notice this carefully, people, I have no more HP itself, which means this is getting lapsed off. I cannot do anything about it. No set off against other heads, no carry forward, therefore fully lapsed. Straightforward gone. DTR ka problem. That is why we people generally recommend not to go for DTR for these kind of issues. Next, the following other details and unabsorbed depreciation is given to you. Question says, I have brought forward business loss from manufacturing business. Can I set off? Yes, I can set off against my business profit. I can set off against my business profit. Unabsorbed normal depreciation also will be set off against my business profit to be allowed as deduction. Next, it says brought forward loss from owning and maintaining horse races, carry forward. Unfortunate enough, you can carry forward because owning and maintaining horse races ka losses can only be set off against income from owning and maintaining horse races. I don't have such income, carry forward. Yes, I think easy question, people. Once you analyze the question, see, things become so much easier for you to present down. Yes, now I don't have anything much to present down, so I can directly write my answers off. Let's write. First is my income from salary. What is my income from salary? Income from salary is given as 3,40,000. Yes, I am going to say when it comes to HP, fully ignore. Fully ignore because I had loss from let out, which I could not do much about. Interest on SOP is anyway getting skipped off, so it doesn't matter. Moving on to PGBP. Moving on to PGBP, what are you going to do, people? First, you're going to say 96,000 plus add back additional depreciation, 4,000 rupees, adding the number to become 1 lakh. Yes, with my number becoming 1 lakh, now I will set off my losses. So what do I have? I have PGBP loss. I think it was 35,000. I have unabsorbed depreciation, which is about 10,000. So 45,000 gone out of this. Answer becomes 55,000 as my PGBP income. Correct, my friends? Any doubts on this part? Chalo, let's tick it off. I am done with salaries, HP, done. I am done with this. I am also done with this. I am also done with this. This is what is done. This is anyway getting carried forward, so it doesn't matter, which means I'm only left with losses. So let's take my capital gains into question. Capital gains is 1,40,000. Set off of capital gains 1,15,000. So 4 says LTCG. LTCG my answer was 1,40,000. Setting off my long-term capital loss, which is 1,15,000. Answer hits me as 25,000. Yes, that leaves me with the last one, which was my lottery winnings. So let's put it as IFOS lottery. What is my IFOS lottery? IFOS lottery is going to be 40,000 rupees. IFOS lottery is 40,000 rupees, and that's it. I don't think we had any chapter 6A. Anyway, you can't claim chapter 6A, you're in DTR scheme, so therefore the answer is total income, full stop. What is my total income? 3,40,000 plus 55. 3,40,000 plus 55,000 plus 25,000 plus 40,000. Answer hits as 4,60,000. Simple, straightforward. That's it. Yes, which means from a losses perspective, people, things to be kept in mind is these two concepts, the concepts of LDR when it comes to your HP rules. When it comes to your HP rules, be very, very careful on this as an adjustment of. This is the only thing which is different when it comes to LDR, when it comes to DTR. When it comes to DTR, so be very careful on this. Yes, you have other things like additional depreciation to be ignored off, very obvious. 35AD to be ignored off, very obvious. This is the more critical part. This is where I say test you on things. Be very careful on this adjustment of. Yes. Apart from that, I think the question was easily manageable, did not have any challenges whatsoever. So I was able to answer the whole question of what is to be carried forward. Only two items, and only one item. In fact, I can only carry forward the owning and maintaining horse races. 50,000 rupees will be carried forward. Everything else will be skipped off. Yes. Good. Chalo. Question number 8. September exam question, people. Let's see if you're able to answer the September exam question. Little lengthy, but 6 marks. I don't think this was difficult, but let's see how it goes. Question number 8. It says, Surbi is a resident individual aged 35 years. Again, I'm seeing a person called resident aged 35 years, normal citizen, working partner in 2 firms, engaged in retail business of garments. She is a partner in a partnership firm. Provides with the following information to you. You are required to compute the gross total income. See, very carefully, they are only asking you to compute the gross total income, not the total income, under appropriate heads of income, and the amount of loss that can or cannot be carried forward, assuming that she has opted out of DTR. Assuming that she has opted out of DTR, which means I am going for ATR scheme. I am going for ATR scheme. Will your answer be different in case she does not opt out of DTR? In your answer will be different if she does not opt out of DTR, which means now the question is asking you to do DTR and ATR also. However, question says there is no need to compute the tax payable under any of the regimes, which means they just want the total incomes. Total income is what they want in both the scenarios. So I can create 2 columns right now, one for DTR, one for ATR. Yes, chalo. Let's look at the adjustments. Now, when I'm going to look at the adjustments, people, I'm going to do adjustments based on both DTR and ATR. Maybe different color pen. I'll use blue for ATR and I'll use dark blue for DTR. Let's do it that way. Question says, remuneration received as partner from a partnership firm 9.7 lakhs, 9 deductible, which means taxable under PGBP. Simple, straightforward. Yes, careful. Remuneration received from partnership firm is always taxable under PGBP. Loss from intraday trading in shares of an Indian company listed on a stock exchange. No delivery of shares is made. See, this is what I was talking about. ICA now has made it extremely clear to you that they will not use the word, they will not call it speculation anymore. If they use F&O, it is a normal business loss. But if they start using the word intraday and everything, it automatically means it is a speculative transaction. So this is a speculative loss. Now, when it comes to speculative loss, you can only set off against speculative profits. I don't see any speculative profits. Hold back. Income from activity of owning and maintaining horse races is going under IFOS, no change. Long-term capital gains on sale of property computed as per provisions of income tax. This is section 112. Interest on loan taken for repairs of self-occupied property. Here is where the challenge is. What is going to happen? I'm going to claim 30,000 as deduction under ATR and I'm going to claim nil if I'm going for a DTR. Now notice people, if I'm in ATR, then 30,000 rupees is a loss and this loss of 30,000 rupees will have to be set off. So I will set it off against my salary income because I don't have any more HP incomes. Next, amount received as advance towards sale of shop which was later on forfeited as buyer could not comply the agreement. Advance forfeiture happening in the current year, post 2014, directly taxable under IFOS. Share of losses from partnership firm, a question which we have done 100 of times right now. Profit from firm exempt, share of losses exempt. Loss on betting anyway to be ignored, doesn't matter because you can't claim losses from incomes of winnings. Interest on fixed deposit is 0.8 lakhs. The fixed deposit of 10 lakhs was gifted to her by her father-in-law on 1st April 2025. People, gift given by father-in-law. Notice father-in-law giving gift to me, meaning I am the son's wife. If I am the son's wife, any kind of income given from them will be taxable in the father's hand. Yes, clubbing of income says any transfer happening to spouse or son's wife will be taxable in the hands of transferor. Here is a case where father-in-law gave the gift. This income is going to be taxable for the father-in-law, not taxable for me. This is getting clubbed. This is getting clubbed. I hope you understood this. Yes, good. Chalo. Following are the other information given to you. Long-term capital loss on sale of listed shares is 3.8. People, do I have long-term capital gains? Yes, which means this is getting set off. Loss from owning and maintaining horse races. Loss from owning and maintaining horse races will go against income from owning and maintaining horse races. Do I have? Yes, I have an income of 7 lakh rupees. Income from owning and maintaining horse races will be set off there. And that is what the statement is. Yes, nothing complicated about this, people. Even between DTR and ATR, the only one change which happened is on the HP loss. That is the only change which you're going to make. Other than that, the answer is fairly simple and straightforward in both the scenarios. Should not be much of a difficulty part at all. Yes, we can easily finish off the answer. I think this was fairly an easy question. Definitely an easy question. September, I don't think was very difficult. Yes, again, but little bit lengthy. You'll have to prepare this properly. So let's prepare this together, people. Always recommended, if you have 2 regimes, put them regime together itself parallelly. So I'm going to say one for DTR and one for ATR. And one for ATR. Let's do this. First is my salary. How much is the salary given to me? Question says I don't have any salaries. Huh? I don't have any salaries. I don't think I have any salaries. Yes, I have no salaries. I'm sorry. So no salaries for me, people. I'm directly moving on to PGBP. I'm directly moving on to PGBP. What happens? My PGBP is 9.7 lakhs in both the scenarios. $9,70,000 in both the scenarios. Apart from that, what do I have? I have a loss from intraday. This has to be unfortunately carried forward. I don't see any speculative income in the current year. Therefore, this is getting carried forward no matter what. I can't do much about it, which means all this is done. Now, what happens, people, is the important part. The change which happens in your DTR, ATR, what will you do? You will say loss from SOP. You will say loss from SOP, which is going to be 30,000 rupees only under ATR, because the house was taken for repair purposes. We have repairs coming into picture. Repairs matlab maximum 30,000 rupees to be taken. That is the only change that you're going to make. Apart from that, the answer remains as it is. So 9,40,000 becomes here. 9,70,000 becomes here. Full stop. Yes, done with the adjustment. So let's take this adjustment out. I am done with this adjustment because I'm going to carry it forward anyways. Moving on forward, I am moving on to what is called as my capital gains. So point number 2, which is coming to CG. What was my CG, people? My CG has been confirmed to me as 9.2 lakhs. So my CG has been confirmed as 9.2 lakhs, giving me my loss set off. How much was the loss that I have in my current statement? My losses is given as 3.8 lakhs. Help karo. 9,20,000 minus 3,80,000, answer comes to 5,40,000. I'm going to keep this the same under both the regimes because I anyway don't have a difference no matter what. Yes, so 5,40,000 ka long-term capital gains. Next, moving on to IFOS. So I have, I think this is 4, this is 3. I have IFOS in the statement. What IFOSs and all do I have, people? I have been confirmed that I have something called income from owning and maintaining horse races. Yes, so putting out my IFOS, one is owning and maintaining horse races. I think the income was given to me as 7 lakhs. Yes, so income of 7 lakh rupees. Apart from that, I have a loss of 25,000. So take my 7 lakh rupees, reduce 25,000 rupees from the statement computation. Answer became 6,75,000. Answer became 6,75,000. Apart from that, do I have any other incomes? Yeah, I have a forfeiture of 5 lakhs. So I'm going to call it advance forfeiture. 5 lakh rupees. Correct? Yes, so advance forfeiture is also done, and I think with that we are done with all the adjustments off. We have nothing else pending. I don't see any chapter 6A reductions and all, which means this is going to be my answer. This is going to be my answer. Let's find out the answer. I'm going to do the right side first. So 9,70,000 plus 5,40,000 plus 6,75,000 plus 5 lakh rupees. Answer hits as 26,85,000. Yes, on the right side, what is going to happen? I'm going to claim an extra 30,000 cut deduction. So it is going to be 26,55,000. Simple, straightforward. And this is going to become my total income. This is going to become my total income GTI, whatever you want to call it. Let's call it GTI. Let's call it GTI. Simple, straightforward, people. September exam question. See, you know how easy this was. Easiest question you could have got in September examinations. It was a little lengthy because you had multiple things. Now, I have not completed the complete format. I'm repeating myself so many times right now. People, all the things which we skipped off, the items which we skipped off, you will have to write notes around it. Write notes, get full marks. Other than that, please don't write these much notes alone. If you write this much, only 4 marks you're going to get out of 6 marks. You need 2 more marks for the other adjustments. So please write your notes. Yes. Chalo. Good. 1 hour 32 minutes. I have 3 more questions to go. 3 more questions to go. Let's see, people. RTP. Again, RTP is always risky. So let's look at the question very carefully. Chalo. RTP dekhte hain, people. RTP says, I am Mr. K, 48 years, resident individual. Details of incomes are given to you with diversified portfolio. Last line says, compute the total income. I want the total income of Mr. K, assuming that he exercises the option of shifting out of default tax regime. Friend is going for ATR. Assume Mr. K's total income excluding minor income is higher than that of his wife, which means Mr. K is going to club the minor child income. That is what is confirmed to you. Next, let's read. It says he runs two businesses. One is called as manufacturing business with a profit, PGBP. Speculative business with a loss. This is my speculative loss. People notice speculative loss can only be set off against speculative profits. No speculative profits, therefore carry forward. Next, he incurred a loss of 2,15,000 from a let out property and also earned an income of 50,000 from owning and maintaining horse races. For earning this income, he incurred an expense of 50,000 rupees. Now, people, this is where I'm assuming students are going to start getting confused. Notice carefully first, he incurred a loss of 2,15,000 from let out property. This is my HP loss. Now HP loss ka kya condition hai? We discussed when it comes to HP loss, if you're in ATR scheme, you can set off against salaries. But when you're setting off against salaries, you can only set off to a maximum of 2 lakh rupees. I have still not been confirmed my salary, so I'm going to set off against PGBP income. Answer is going to remain the same. It's not going to change whatsoever. But problem is, he has earned 50,000 rupees from owning and maintaining. For earning this, he has incurred an expense of 50,000 rupees. Now, the problem is 50,000 rupees of income and 5,000 of expense. Can you set off? Answer is yes. Answer is yes. Now, here is where students will end up getting confused. Students will come and say, Rahul, horse races hai. Horse races pe to you can't claim expenses. No. People, this is not your horse races. This is owning and maintaining horse races. Taxable under IFOS topic, but still eligible for its expenses. So, owning and maintaining horse races, incurred expenses are allowed as deduction. Very, very important for you to keep in mind. Don't end up making a mistake here. This is an allowable expense no matter what. Next, he has earned a short-term capital gain of 50,000 from equity shares which are sold on 10th May 2025 on which STT was paid, and a long-term capital loss of 75,000 from other assets sold. Notice I have LTCL and STCG. Can I set off? No. Long-term capital loss can only be set off against long-term capital gain. Therefore, this is getting carried forward. Be very careful. Mr. X took a divorce from his wife in April 2025 and the custody of their minor child is given to Mrs. K. Following the divorce, he transferred ownership of house property to his wife. During the financial year, the property generated rental income of 5 lakh rupees. People, at this stage, you have to be careful that whenever any kind of asset transfer happens because of an agreement to live apart, clubbing rules will not apply. Deemed ownership will also not apply. When both the scenarios are not applicable, this is taxable for the wife and therefore to be ignored. Be very, very careful on this. Next, Mr. K deposits cash of 50,000 every month into the bank account of his minor son. During the 25-26, interest income of 25,000 is generated in son's bank deposit. The next thing for you to keep in mind, notice people, the line somewhere on the bottom comes and says that the minor child is basically, you are having income more than your spouse. But on the top line item, they have come and clarified to you somewhere silently that the custody of the minor son is given to Mrs. K. Clubbing rules come and say that the clubbing applies to either parent whose income is higher only till the marriage is subsisting. When the marriage is dissolved, then it is only clubbed in the hands of the parent who's taking care of the child. Because the child is now being taken care by spouse, the husband has nothing to do with this, and therefore this again is also getting ignored. I hope this made sense to you. Be very careful. Next, he has also contributed a sum of 2 lakh rupees to electoral trust and incurred an expenditure of 30,000 rupees on advertisement and brochure of related party. Chapter 6A deduction will come into picture. He has authored an investment portfolio book and received a royalty income of 4,10,000 rupees during the financial year 25-26 from the publisher in Germany. Royalty is calculated at 16% of book sale. Incurred 60,000 rupees for earning the income. Out of the royalty, only 2,90,000 was remitted in 31st August. Balance was remitted abroad and the balance remained in abroad till 30th September. People, this is your IFOS along with the section called 80QQB. Yes, and adjustment question which we have done so many times in chapter 6A, and I marked it as LDR during your classes also. A very critical chapter 6A deduction. We will discuss about this as we proceed forward. I hope by now your adjustments are clear, people. Yes, there is very little to do in this question, but still so many adjustments for you to keep in mind. So we are going to ignore items. So 4 is getting ignored, 5 is getting ignored. Yep, I think balance is what we have to take into consideration. So let's take the balance into consideration and let's write our answer out. Yes, let's put our answer out. Let's see if you're able to get the answer along with me. What is going to happen, people? Firstly, if you notice, there is no salaries in this question itself, which means I directly have to jump to the next heads of income. I don't have any HP income. I have only HP loss. Therefore, I can directly put my PGBP here. How much has my PGBP been confirmed? My PGBP has been confirmed as 10 lakh rupees. Speculative loss is anyway getting carried forward. So therefore, I don't have to worry about it. So 10 lakh worth of PGBP loss. Reduce of your HP loss. How much HP loss am I going to reduce? I am only going to reduce 2 lakh rupees ka HP loss. So reducing 2 lakh rupees ka HP loss, the answer comes to 8 lakh rupees. Yes, what else is left? I am done with this. I am done with this. Next one. I am going to, yep, I think then I have to move to capital gains. So if I move to capital gains, question comes and says I only have a short-term capital gain. Short-term capital gain is 50,000 rupees. Long-term capital gain is 75. Doesn't matter. Take my short-term capital gain of 50,000 rupees. Correct. Moving on forward, I have my IFOS income. What IFOS incomes do I have? I first have owning and maintaining horse races. Now, owning and maintaining horse races, I have a 50,000 worth of income. 5,000 is my expenses, and therefore 45,000 is what I'm going to tax. $45,000 is what I'm going to tax. Correct? Yes, good. With this, I think we are done with this adjustment also. 1 is also done, 2 is also done, 3 is also done, 4 is done, 5 is done, 6 is what is pending. But before 6, people, I have my royalty income to be taxed. So therefore, let's tax my royalty income. How much royalty am I going to tax? Royalty income comes and says I have 4,10,000 worth of royalty. I have 4,10,000 worth of royalty. So my GTI is now computed off. What is my GTI, people? My GTI is 8. No, one second. I've also incurred expenses for royalty. Yes. Be careful on this. Not a mistake you're supposed to make, Rahul. So 4,10,000 worth of royalty minus I have expenses. Minus I have expenses. Expenses become 3,50,000. Careful. Yes, 4,10,000, 3,50,000 is what my income is going to look like. So let's tax now. 8 lakhs plus 50,000 plus 45,000 plus 3,50,000. Answer is going to be 12,45,000. Answer is going to be 12,45,000. Now, I think we are fairly done. Only thing left to do is put off my chapter 6A reduction. So let's put my chapter 6A reduction. Yes, from the top, people. What are the chapter 6A reductions? Do I have anything on the top? No. Yes, I only have a deduction coming off my electoral trust and my advertisement and brochure of related party. Now, here is one thing for you to keep in mind, people, that when it comes to these kind of questions, one thing which you have to always keep in mind is that when it comes to your adjustments of contribution of electoral trust and advertisement and brochure of related parties, there is a section that is called as 80GGC. Yes, now 80GGC unfortunately only captures into mind what is called as electoral trust deductions. It does not take into consideration what is called as political party. Political party is not a deduction that you can claim for individuals. It's a deduction which you can only claim for your companies and forward, and therefore that is not something which is allowable to you, which means the only deduction which I can claim is on my electoral trust. So chapter 6 reduction ka trust deduction is only going to be on my electoral trust, which is called as 80GGC. Yes, so how much am I going to claim? 2 lakh rupees is what I'm maximum going to claim as deduction. Now here is there you have to keep in mind, people, that they've said that you've only contributed. You have not said what payment is happening. So I'm assuming that the payment is happening by other than cash modes. Yes, so 2 lakh worth of deduction is being claimed as deduction under 80GGC. Careful for you to keep in mind. Correct. Yes, let's proceed on forward. Next thing what we have is going to be your most important adjustment, which is going to be 80QQB. Now 80QQB has a certain template, people, that we wrote in classes also. So I'm going to put the template out for you very, very carefully. Step number 1, which is called as amount received. Step number 1, which is called as your amount received. My amount received is 4,10,000. Yes, step number 2 is called as restricted to 15 percentage. Restricted to 15 percentage. Notice carefully, the question basically comes and says that I have received royalty at 16 percentage. Income tax says 80 QQB can only be claimed as deduction up to 15 percentage of the book sales, and therefore what is going to happen? I'm going to say 4,60,000 is going to be for 16 percentage. So how much is going to be for 15 percentage? That is what we're going to find out. What is going to happen? 4,10,000 into 15 divided by 16. Answer comes as 3,84,375. 3,84,375. Next, I'm going to come and ask how much is the amount received in India by 30th September of the assessment year. Yes, provisions come and say that when you're receiving royalty from outside India, you should receive the money within 30th September of the assessment year, 6 months. If you don't receive the money within 6 months, unfortunately, I can only claim deduction to that extent, which means 2,90,000 is what I have only received. So 2,90,000 is what I can maximum claim as deduction. Step number 4 is reduce the expense which you already claimed. In my case, I've already claimed an expense of 60,000 rupees. So I reduce that expenses off, leaving me with an answer of 2,30,000. That gives me step number 5. Step number 5 is restrict to 3 lakhs. Step number 5 is restrict to 3 lakhs. Now I only have 2,30,000, which means 2,30,000 is what I'm going to claim as deduction. These are some steps that we've written in classes also, people. I hope you remember the steps. If you're from a student not from my classes, please note down the steps. These steps will make your life easier for you to prepare for 80 QQB properly. If you ever get a question like that in examination, be very, very careful. These are the steps. What is step number 1? How much you received. Step number 2, restrict to 15. Step number 3, check how much you received within 6 months. Step number 4, reduce the expenses you claimed in IFRS. And step number 5, restrict it off to 3 lakh rupees in order to claim your deductions off. Yes, that is what the answer is. So 12,45,000 minus 4,30,000 worth of deductions I'm claiming, 8,15,000 is my right answer. 8,15,000 is going to be my total income, and this is what my statement is. This is what my statement is. Any doubts on this part, my friends? Clear enough to go? Yes, yes, perfect. Yes, adjustments to be kept in mind. Your LDR of that thing is already given. This is something, if you have not been part of my student base, then please mark this adjustment also, because this comes in often very examinations. So be very careful on this part. The political party is a very small thing, people. So if you remember it, great. If you don't remember it, just be very careful about it. Political party deductions are not eligible for inter-syllabus. That's eligible for final syllabus. Clear? Yes, chalo, good. That leaves me with 2 more questions, small questions. Oh no, not small questions, but okay. MTP questions, people. I think we should be able to answer this question off. Dekhte hain. Question number 10. Question number 10 says, compute the gross total income of Mr. Neeraj under normal provisions of the Act and show the provisions which are carried forward and up to the assessment year up to which you can carry forward the following information. Notice question says I'm going for normal provisions. Matlab my friend is going for ATR. Facts are given to you. Assuming that Mr. Neeraj has furnished his return of income on or before the due date and all of the previous years, which means all things have been done properly, no challenges whatsoever. Let's look at this carefully. Question says, I have loss from speculative business PQR, income from speculative business XYZ. Very simple, straightforward. Loss from speculation can be set off against income from speculation. Less loss from specified business under 35 AD. People, if you have any specified business loss, it can only be set off against specified business profit. I don't have any specified business profit. I will carry forward for infinite years. I'll carry forward for infinite years. Income from salary is 4,18,000 already computed, given to me. Loss from house property is 2,20,000. I will set off only to the extent of 2 lakh rupees. 20,000 is getting carried forward for 8 years. Yes, so what am I going to say? I'm going to say 20,000 rupees to be carried forward for 8 assessment years. Next, income from trading business, normal business income. Long-term capital gains from sale of urban land. Saw it in the first question also, people, same thing. Long-term capital loss on sale of equity shares, LTCL can be set off against LTCG, set off allowed. Long-term capital loss on sale of listed equity shares and recognized stock exchange doesn't matter, again set off, which means both the incomes are getting set off accordingly. Short-term capital loss under 112A, people, here is where you have to be careful. When you have STCL loss, STCL can also be set off against long-term capital gains, and therefore adjustment will happen here also. Adjustment will happen here also. Now, do you need that much is a different conversation. If you don't need that much, you can carry forward the remaining, but you will have to adjust if at all it is required. Next, brought forward loss from speculative business is 18,000 rupees. Do I have any incomes? Yes. So therefore, I'm going to set off. Brought forward loss from trading business is 12,000 rupees. Do I have any brought forward income from trading business? Yes, I have an income from trading business. So therefore, this is also getting set off. Next, unabsorbed depreciation is 1 lakh. Please set off. And that's it. This is the fact pattern. Easy, straightforward question. I don't think this is going to be any difficult at all, people. We can easily finish off the question. Yes, it's only the format. Nothing great about the question. So let's put out the format. First things, I am going to have what is called as salary. What is my salary given to me in the question? 4,18,000. I'm going to reduce 2 lakhs in it. Yes, so salary is going to be 4,18,000. Reduce of an income loss of 2 lakh rupees from HP. Two lakh 18,000. Correct? Yes. Next, I'm going to take in my PGBP. Now in PGBP, people, multiple things are happening. So let's put out this carefully. First is called as your speculative profits. How much is my speculative profit? My speculative profit is given as 25,000 rupees. My speculative profit is given as 25,000 rupees. Now I'm going to ask you a question. Be very careful. Question is, people, I have two speculative losses. One is past speculative loss and one is current speculative loss. Which one should I set off first? Which one should I set off first? If you're thinking that the answer is past because it is beneficial, no. We discussed, I'm repeating this again. First intra-head, then inter-head, then past year loss. Intra-head, inter-head, past year loss. What is it? Intra-head, inter-head, past year loss, which means first to set off the 12,000 rupees ka loss. I will have to set off the 12,000 rupees of loss even if it is not beneficial to me. Then I will set off my brought forward loss. How much is my brought forward, people? I think it was 18,000 rupees. Now I don't have to set off 18,000 rupees. I only need that much. So first check note, 22-23 speculative loss to be carried for 4 years. 23-24, 24-25, 25-26, 26-27. This is my last year of set off. And therefore what is going to happen? I'm going to set off to the extent of 13,000 rupees, which I require for my losses. Therefore that is what I'm going to set off. The balance is getting lapsed. The balance is getting lapsed. Why balance is getting lapsed? Because my 4-year period is getting exhausted. Rahul, this is unfair. No, you should have first set off 18,000 rupees. You could have at least carried for the 12,000 rupees. That is income tax, people. Income tax is not going to play nice with you when it comes to losses. So yes, you're losing losses here. No options whatsoever. Next is going to be my normal loss. Let's see. Next is going to be my normal profits. What is my normal profits given in the question? I think my normal profits in the question was... what is my normal profits? My normal profits was 2,80,000 rupees. So I'm going to take my normal profit of 2,80,000 rupees. Reduce what is called as brought forward loss. Reduce what is called as unabsorbed depreciation. Unabsorbed depreciation, if I remember, was 1 lakh rupee. My brought forward loss was how much? My brought forward loss was 12,000 rupees. Help, 2,80,000 rupees minus 1,12,000 rupees. Answer is going to be 1,68,000. Answer is going to be 1,68,000. Yes, 1,68,000 of PGBP has been determined. So which means I'm done with this. I am also done with this. I'm also done with this. That gives me my capital gains, people. What am I going to do? I'm going to take my capital gains accordingly. Yes, so let's take the capital gains off. I'm going to have long-term capital gains. Long-term capital gains has been confirmed to me for 2,05,000 rupees. Correct. Now, Rahul, order of set off, what should I set off first? I would always recommend set off long-term capital loss first. Why Rahul long-term capital loss? Because long-term capital loss has restriction. They can only be carried forward and set off only against long-term capital gains. As compared to that, the short-term capital loss can still be set off against short-term capital gains and long-term capital gain. So it's better to keep this on hold. Yes, so I'm not going to set off this completely. I'm going to take that incomes accordingly. So I'm going to take first 85,000 ka LTCL. Oh, this is an income. It's not a loss. Sorry. Next, I'm going to have one more long-term capital loss of rupees 1,10,000. So 85 gone, 1,10,000 gone. How much am I left with? I am 1,95,000 minus 2,05,000. I need another 10,000 rupees. So 10,000 rupees is what I'm going to set off from my short-term capital loss, giving me my income as 0. Giving me my income as 0. What am I going to do? The balance is going to be carried forward for a period of 8 assessment years. Very good. For a period of 8 assessment years. With this, people, I think I'm done. So therefore, I can find my GTI out. What is my GTI? My GTI is 2,18,000 plus 1,68,000. 3,86,000. Is my answer. Full stop, straightforward. That is what the answer is. Clear enough, my friends? Yes. Okay. Rahul is writing way too much, so Rahul's hand is breaking, but nevertheless, last question for Rahul, and then we're done with this. Yes. So stick with me, people. If I'm putting efforts, I hope you are also putting the equal amount of efforts. Let's try it off. Last question for us to close off. You. Last question. MTP number 2, Jan 26. Last question for you to solve off. Let's do. Question says, I am Mr. Sanjeev, age 30 years, submitting the following information to you. Person is 30 years, person is normal citizen. Last information says, compute the total income. If he opts out of default tax regime, person is going for ATR. Okay. Question says, Sanjeev had a house in Delhi during the financial year 23-24. He transferred the said house to Mrs. Veena, daughter of his brother, without any consideration. He has transferred the house to his daughter's brother. House would go back to Sanjeev after lifetime. Now, this is where you have to be careful. People, when they say after lifetime means this is not irrevocable. And the provisions of irrevocable is that if it is irrevocable, then it is not clubbing. Be careful. The transfer was made with the condition that 15% of the rental income shall be paid to Mrs. Sanjeev. Rent received by Veena was 6,50,000. Now, this is the most important question. This is one question, I have it in my book also, people, and I've told you people that this is a question which gets tested in exam multiple times. Understand. Clubbing of income comes and says that when you transfer any asset on irrevocable basis, clubbing provisions will not apply. However, if it so happens that you indirectly or directly get any part of the profit back to you, then the whole of the income will be clubbed even if it is irrevocables. Yes, so notice this one carefully. Even though the question comes and says that the transfer is irrevocable, 15% of the rental income is coming back to you indirectly in the name of your wife. And if that is happening, then the complete rental income, not the 15%, complete rental income of 6,50,000 will become taxable for you. This is going to be taxable for you under the head HP. Under the head HP, be very careful on it. And because you're doing that, automatic adjustment of 30% will happen. Careful, very, very careful. Next. Mr. and Mrs. Sanjeev form a partnership firm with equal share in profits. Mr. Sanjeev has transferred a fixed deposit of 50 lakhs to such firm. Firm had no other income or expenses other than the interest of 6 lakh from this thing. Firm has distributed the entire surplus to Mr. and Mr. Sanjeev. The next adjustment for you to keep in mind, an important adjustment, one mistake which students will end up making. Rahul, FD was given by Sanjeev, so whatever income is coming for Mr. Sanjeev should also be clubbed for Sanjeev. No, this is share of profits. A very important adjustment, people. This is share of profit from a firm. Yes, this is share of profits from a firm which is fully exempt and therefore nothing is taxable. And therefore nothing is taxable. Even if you want to club Mrs. Sanjeev's income, Mrs. Sanjeev received share of profit. Share of profit to be clubbed for you is anyway exempt, so it does not matter. Ignore adjustment of. Very, very important. Next, Mr. Sanjeev holds preference shares in A Private Limited. He instructs the company to pay dividends to Mrs. Chanchal, daughter of his servant. Transfer is irrevocable for the lifetime of Chanchal. Dividend received by Mrs. Chanchal is 2 lakh rupees. Ayyo, everything is LDR in this. Now, people, here is where the next problem will come. Students will come and say, Rahul, transfer is irrevocable. No, so because transfer is irrevocable, this 2 lakh rupees should be taxable for the servant. No, no, no. People notice he has given instruction to the company to pay the dividends to Mr. Chanchal, which means he is not telling that the shares are going to Chanchal. The dividends are going to Chanchal. This is not 61, this is 60. Section 60 comes and says, when you transfer any income, then the income will always be clubbed. Whether the income is revocable or not, it doesn't matter. Here is a case where he is not transferring the asset, he is transferring the income on that asset. And income on the asset, when it's transferred without transferring the asset, it is to be clubbed. It is to be clubbed, and therefore this will be taxable for Mr. Sanjeev under the head IFOS. Very, very critical for you to keep in mind. Careful. Next, Mr. Sanjeev had a short-term capital loss of 16,000 rupees from sale of property and long-term capital gain of 15,000 rupees. Can I set off? Yes, I can set off. Short-term loss can be set off against capital gains. Other income of Sanjeev's are given to you. Interest from savings account is 2 lakhs. Please claim ATTTA 10,000 rupees ka deduction. I am a normal citizen. Cash gift of 75,000 rupees received from daughter of a sister. Sister's daughter is not a related party, people. IFOS income fully taxable. Next, income from betting, IFOS income. Income from card games, IFOS income. Loss on maintenance of horse races to be carried forward because it can only be set off against income from owning and maintaining horse races. Yes, an important question, people. This is something which is there in my question bank as well, but nevertheless, question very critical. Keep in mind, many adjustments are very, very critical for you to keep in mind. Yes, I think last question, let's solve it off. What is the answers going to come to? First things, people, if I'm looking at this, I am going to have some incomes to be taxed. First is I am having HP income. Second is profit of firm, which is anyway exempted off, so therefore ignore it off. Third is going to be dividends. Fourth is going to be capital gains, and then I have IFOS income, which means the first income I have is HP only. Yes, so I'm going to have HP income for me to take into consideration. Now, what is this HP, people? The HP is the income coming from Veena. The rent of Veena fully is taxable. So, the full 6,50,000 will get taxed in your hand, allowing a 30% standard deduction. So, 6,50,000 pay 30% if you remove. Answer is going to be 4,55,000. Correct. Next. Do I have a capital gains? Yes, I think the question came and said I had some short-term capital gain. Short-term capital gain was about no, sorry, I have a long-term capital gain. I have a long-term capital gain of rupees 16,000. I have a short-term capital loss of rupees 15,000. I have a long-term capital gain of 15,000. My short-term capital gain will also be restricted off to 15,000 rupees, and therefore my income becomes 0. I'm going to say restricted off. Balances carry forward for 8 assessment years. Balances carry forward for 8 assessment years. Clear? Chalo. What else is there? This is done. This is done. Any other capital gains? No, I don't have any other capital gains, which means I'm moving on forward to the third item, which is called my IFOS income. Now, IFOS is multiple things, people. So we're going to put this each item one by one. First is going to be my dividend from preference shares. What is my dividend from preference shares? Question comes and says my dividend from preference shares is going to be 2 lakh rupees fully. Next, I'm having interest on savings. Was dividend 2 lakh rupees? Yes, dividend is also 2 lakh rupees. Savings is also 2 lakh rupees. Wow, 2 lakh rupees is a huge number for savings account. Okay. Cash gift is 75,000. winnings. Yes, I'm going to club both the winnings, people. So my winnings is going to be 34 plus 46, which is going to be 80,000 rupees. So my winnings is going to be 80,000 rupees, and this is my total statement of, let's answer the questions. So it's 4,55,000 plus 4 lakh rupees plus 75,000 plus 80,000. Answer hits as 10,10,000. Answer hits as 10,10,000. On this, I'm going to claim my chapter 6A of 80T TA, which is 10,000 rupees, giving me a nice round number of 10 lakh rupees. A nice round number of 10 lakh rupees has come to me, and this is what my total income is. So I'm done with interest, I'm done with cash, I'm done with betting, card games is done. This is anyway getting ignored off to be carried forward, and this is what my statement is. So my answer is 10 lakh rupees, and this is finally the end of it. Yes, exactly at 2 hours and 2 minutes, people. Like we promised, 2 hours later, we have completed 11 questions for your chapter off. Yes, this is what your capital gains, this is what your clubbing and set off looks like. I hope you have understood everything. My sincere request, people, that every adjustment that you have marked as LDR, kindly go through them once. If you are able to manage these LDR adjustments itself, then yes, clubbing and set off, majority of the adjustments have been covered here. You should be able to answer your questions no matter what. I can promise you that most of the difficult adjustments which has come in examinations, everything that I wanted to put in my question bank is already there in this 11 questions. So you have already covered every single adjustments of this paper. If you're able to solve this clubbing and set off chapter, you are guaranteed 6 marks. I will definitely be putting out another video for the theory topics as well, people. So 6 marks there and a 4 marks here. A guaranteed 10 marks of your question number 4 is already in your hand. If you can guarantee that much, trust me, people, you will get immense amount of confidence for your examinations. So yes, as I'm completing this, I know some places we have gone a little tricky, but I'm still repeating this to you. Please attend question number 4. It is a scoring question. It is a scoring question, rather better than attending TDS in question number 2, which you anyway would have to skip off no matter what. Yes, so to that extent, my sincere request, please attempt question number 4. But yes, until such time, I hope you enjoyed this video. I know this was lengthier than other videos, but it was definitely important that I spent time with you enough for you to complete this chapter properly enough. So yes, if you have enjoyed this video, please drop in a like, and please let me know in the comment section what is going on with you, how is things going on, and if you have any other suggestions from my side for which I can help you prepare for your examinations, I'm always happy to oblige. Yes, on that note is what I would like to sign off. We are now done with assignment number 5, leaving me with 3 more assignments. I think one is on TDS, one is on return filing, and finally your comprehensive questions. 3 assignments for us to complete together, for us to satisfactorily complete the subject of direct taxes, proper preparation, and rank for your examinations. On that positive note is what I would like to sign off for today. I will see you all in the next videos very, very soon. Until such time, please keep learning, please keep enjoying the subject, and please have that confidence in yourself that you're going to become a qualified chartered accountant. Take care. Bye bye. Bye.